Okay, welcome to this week's video. Okay, so last week has been a very challenging week for me. Okay, very busy because my daughter fall sick lah. Then later my wife fall sick lah. Lucky I'm the only one standing strong. Okay, so last week cannot do video lah, too busy lah. So this week we're gonna talk about two things. I know that you all like to. There's two things that you all like to ask me, and two things that you all like to know. Like, hey, this project good or not? That project good or not? This condo good or not? That condo good or not? The next thing you like to know is every time I talk about the property market I see the views are very high. Like last time I talk about the property market, I talk about what happened to HDB and everything. Got 13,000 views. Scary. Okay. So anyway, to create a video is not easy. Okay. It only takes you half a second to like the video. It doesn't cost you a single cent. Okay. So please help to like the video, like, share, and subscribe. Okay. So today, before we go and talk about the how to determine a good investment property or a good investment condo, private residential, we talk about the property market first. Okay, so the property market has been relatively boring. Why do I use the word boring? Because to be frank, I don't see any new things happening in the property market. No good launches yet. I think there's some good launches coming in the next few months, but as of now, I have not seen a launch that is really worth it lah, in my perspective lah. Okay, so there's nothing much. That's number one. Number two, the HDB market is still the same. Definitely a little bit slower, but not like slow. Compared to what happened in last month when everyone start to come back and buy property in April. I think it has slowed down a little bit. Still fast. Prices more or less, I don't think it's high. It's quite moderating. One thing that I want to say is that why everyone still keep talking about 1 million HDB flat. You know, it's like I feel that the news and everybody is using this 1 million HDB flat as a I don't know, like a topic or like a wow kind of thing, you know. But the thing is, 1 million HDB flat is very, very common nowadays, guys. It's very common in a few ways. Why? Number one, okay, the government has built HDB flat in very prime areas in the last few years, or in the last 10 years to 5 years. So there is a lot of newer prime HDB flats, and these newer prime HDB flats will definitely get $1 million. Why? Because a 4-room flat in Punggol today is already 600 plus K. How can a 4-room flat in a 5-room flat in prime area not be $1 million? You know, so in Punggol, our 4-room flat are already at about 650 over 1,000. In Toa Payoh, our 4-room flat is already at 800 over 1,000 to $1 million. How can the prime areas not be above $1 million? And how can the big gigantic units not be above $1 million? So actually, to me, I can tell you that 1 million HDB flat is in the past already. It means like, please look forward lah. 1 million HDB flat is very common already. So I feel that the newspaper and people are talking about 1 million HDB flat like a wow thing, but it's happening every day. You know, it's no big deal. I myself, the highest I transacted is 1.4 million. So is it a big thing? To me, it's really not a big thing anymore, because it's very common to have 1 million HDB flat, and it's going to be more and more common because if you look at the datas, more and more prime HDB flats are going to reach their 5 years MOP. They're going to start selling. And if we want to talk about, is this a problem? I will say that if you recognize this as a problem, then this is a mistake that has been done already. Means the government built too many HDB flats in prime areas. So because of this problem, it's very common to see 1 million HDB flat. So they have already corrected this issue by coming up with the prime living, prime housing or something, where you need to give back some things, MOP 10 years and whatsoever. Okay, so this has been corrected. But besides this being corrected, the old HDB flats, you will definitely still see the 1 million HDB flat in the market, and it's going to be common. Okay, Number two, I don't know number two or number three lah. Private resale property, I think is kind of slowing down already. I think is more or less moderated also. We don't see a big price hike. And even now you go into the market, yes, you do see a lot of people asking for very high price, but you don't see them being transacted. You don't see people buying them. If you are one of the sellers that is asking for very high price, yes, you do get viewings, but you don't get offer. So in the resale private market, I think people are recognizing that some areas this price is too high. People are more conscious about pricing now. Instead of having the FOMO attitude for the last 4 years, people are more careful now. Because I give you an example, 4 years ago, this property may be asking for maybe about 1,100 per square feet. Today is asking for 1,450 per square feet. And last year, it may have been transacted for 1,300 per square feet. But today, people are asking for 1,450 per square feet. So the jump is getting more and more ridiculous. This seller, I always deem them as seller that sell for money. No money, they won't sell. They are not sellers that need to sell. So when you see this kind of advertisement, I mentioned in a lot of my other previous videos is that these people, they sell for money. So if you are that stupid buyer that want to go and buy all these properties, then no choice lah. Nobody can stop you because you got money. But most of the buyers will not put themselves in that situation. So if you look at transaction data, you don't really see the highest transaction data being transacted. So let me share with you a little bit. My system, right? If there is a data that is like highest transaction, means like in terms of quantum and per square feet. So in condo, we look at per square feet price, okay? In HDB, we look at quantum. In condos, we look at per square feet price. If you look at the per square feet price, if it's highest transacted, it will be in red, okay, in my system. So actually, for the last few months, we don't see this red thing anymore lah. The red thing happened mostly 2023. So we don't see this red thing anymore. Means people are not transacting at record price anymore. So this is what is happening in the resale market, the resale private market. So I feel that it's a norm over there already. Okay, as for new launch, I will say that new launch is a totally different market lah. Different people buy for different reasons. Some people, they will definitely buy new launch, whether is it good or no good, as long as it's near their house, they got the money and whatsoever. So we are not going to touch on that. Okay, last but not least, let's go to our topic. You guys like to ask me on my live stream or whatsoever and ask me, hey Aaron, waterway, what waterway point good or not lah? What residence good or not lah? What grand good or not lah? What blah blah blah, which condo lah, terrace lah, what good or not? Okay, so I'm gonna answer this question directly and indirectly now. So let's go. Wow, I spent the last 6 minutes plus talking about the market. I didn't know that I got so many things to say, but really got nothing to say lah. I just sharing with you what are some of the more significant things lah. Okay, so now we go to this. Okay, I feel that a lot of people, right, they like to ask me, hey Aaron, is this condo good or not? Is this condo worth it to buy? Is this condo good? Is this condo make money? This condo, it's very common. I always get this in my live stream. So I feel that to give you a very good analysis, which I call it level 1 analysis or first layer analysis lah. Because for myself, when I being asked this question by my clients, I go through the same assessment. So I will go through the same analysis before I specifically target the unit. So in terms of, first of all, we identify whether this project is good or not. Means this condo itself as a whole. We don't go to the unit specifically, like, oh, this 2-bedder 948 square feet. We don't, okay? We look at the condo first. So 3 things. In order to find out whether it's good or not, I have this personal interest and my own way of looking into properties is I separate them into 3 different kind of risk level. So to me, I prefer to invest in properties with low risk. There's properties that is medium risk, high risk. So to me, properties is not, there's no guarantee that we can make money. You know, I don't believe in this thing as guarantee make money, but I believe in investing in the property that has the lowest risk to lose money. Okay, so if this property has high risk of losing money, I definitely won't touch. If this property have medium risk of losing money, then I will analyze further, is it worth it, you know. But of course, if given a choice, I will choose the one with the lowest risk. So when I come up with these three risk level, low, medium and high, okay, first thing I look into is the age of the property. So I think age of the property is very important. Why? First of all, if the property is too old, okay, so a lot of people ask me, Aaron, why is too old? I look at this property. If this property is 15, 20 years and above, I will take it as is old. So 25, 30, 40, those 1990s property, they are considered old to me. Okay, so when I look at it, I will identify them firstly as high risk lah. Because my first level is I look into age first. Okay, then if it's medium risk, I would say they are around the 15 years plus minus group. Okay, 10, 15 years. Then the low risk are normally those newer properties lah, around 5 years plus minus. Okay, next I will look into freehold or 99 years. Okay, so why do I look at freehold and 99 years? The way I see freehold and 99 years is very different from you. Okay, why do I say so? First of all, if you understand the property market clear enough, you will know that there's no freehold property that is new. Means like if this is a freehold property, most likely it's an old property. So actually most of the freehold property will fall into the medium or high risk category. They will not fall into the new category. Because if it's a freehold and it's new, I also won't invest. Because the price is definitely higher than the 99 years, which to me, I feel that it's not worth it to go for a freehold property. So I have my reasons for this. So I don't want to go too much into this topic because this is like an argumentative topic. Okay. So first of all, we have to identify freehold or 99. So most of the time, I would say freehold is under medium or high risk. 99 is under low risk. But if it's a 99 and it's a new property, then you have to look into a different way. Okay, so this is the first thing that we need to identify. Okay, thirdly, I will look at the condo got how many units, the number of units in the condo. Okay, why do I say so? It's because if this condo is a small boutique condo, 10 units, 15 units, 30 units, 40 units, 50 units, or even 100 over units, I will put them under the high risk. So I prefer investing in condos with more units. Like example, if this condo have 250 units, that is my line. So 250 units is mostly the low and medium risk. If this condo is too small, it will be in the high risk. Okay, so this has got to do with like small condos, maintenance fee very high, small condos, not enough facility, small condos, not enough transaction, small condos, they are not well known, they got no USP, no unique selling point, people don't target them that much. So these are some of the criteria that we have recognized in the resale market. Okay, next I will look at location. So if you realize we don't touch on price yet because these few factors right will actually adjust the risk factor in low, medium or high first. Then later, then we look at whether the price, is it worth these few factors? Is it worth this risk first? So the fourth factor we look at is location. So we have to see this location. Is it worth investing? Is this location a good location? This location in the future master plan, in the plan by the government, is there something coming? Is there something next? Is there something in the pipeline? What is the future in this location? Okay. The next thing we can also identify is our competitors. So I think it's very important to look into this area. See the other condos in this area. I give you an example. If today I'm investing in an old condo and the other condos around are all old, then I will feel like, there's no good point about this area. Everyone is old. So if everyone is old, then the direction that I will think next is there a en bloc potential? But onward potential to me is not under low and medium risk. Onward potential to me is a high risk, because if you don't have enough knowledge to identify the right onward potential, then there's no point you risk the money mah. So this is one point that I wouldn't look at. But example, today I'm a 15 years or 10 to 15 years condo in this area. Everyone else is 30 years. Then I will feel that yes, this condo is under lower risk, because I'm one of the newer over here. The newest condo is worth investing because I still have a longer time span compared to the older competitors, and I'm standing as one of the youngest in this area, so it's more worth it. Okay, so these are some of the comparisons that I will make during my assessment. Okay, last point. Okay, last point I want to talk about, right, is in condo, right, we don't look at quantum. Okay, we don't look at quantum. We don't look at like 1.2 million, 1.5 million, 2 million, 3 million. We don't look at that. Why? Because every condo unit got their own size. So some size is small, some size is big, some size is 600, 700, 800, 900, 1000, 1002. So every size, right, will give you a different quantum. So the correct thing to compare them is their per square feet price. This is very different from HDB flats, because most of the HDB flat, the 4-room flats, are 990 square feet. So 990 to 1001 square feet, the newer one. So people don't really look at the per square feet price so much. People look at the quantum more. But in condo, because every single unit, the size is different. So if you go to condo A, condo B, condo C, right, their two-bedder can be different sizes. So we compare them in terms of per square feet. So that's very important. So if you look at the per square feet price plus the things that we look before that, example, the age, freehold, number of units, location, future master plan, then we identify if all these things is worth this per square feet price. So, and also when that happens, we also compare, just like I told you, we compare with the competitors. So we take the per square feet price and compare with the competitors per square feet price in terms of the competitors' age, price, our age, price, the competitor, is it a apartment or is it a condo, and then we compare, and then we see whether is this property still worth looking at. So this one I call the level 1 or the layer 1 assessment first, because first of all I have to identify, is this condo worth looking at first. Only when I feel that this condo is worth looking at, then I will go and see the unit in this condo. I will go and view, I will go and identify, and then I will identify those that have passed my first level assessment. Then I will make a comparison on the second level assessment. Okay, so this is how my chain of thought is when I try to identify whether this resale project is it worth buying. So all these things on the first level assessment, we don't go specifically to the units. We can pass the first level assessment, but when we go and see the two-bedder is too small, facing no good, the asking price, because it's in the resale market, the asking price too high, then we will cancel it off. At the same time, this first layer assessment is a very good assessment that you can use for new launch project. Okay, so for new launch project, I look very deeply into first layer. We don't go to second layer yet, because second layer we just look at floor plan. It's very easy. So we look at first layer, then we see, is it worth looking at the brochures, the floor plan. Okay, and then we go to the third layer. For new launch is different. We go to the third layer because we don't know what is the price that is going to be released. So we will put our check, then we will go for balloting. Then on the day we identify the third level or the third layer assessment, whether this price is it worth entering. Okay, so this is some of the thoughts and some of the assessment and the analysis I put in when identifying a good property. So instead of just saying this property good or no good, I think it's more, in my perspective, is safer to identify the low risk, medium risk, and high risk. So lucky I finished just in time. When I take a look at my monitor, right, the memory card finished already. I forget to delete the old videos. Okay, last but not least, I want to give a tip, is that when it comes to CCR properties, right, most of the time they don't fall in low risk, they fall in the medium and high risk. But when they fall into medium and high risk, they may also fall into the high returns Okay, so CCR is a little bit different. CCR, you may take a higher risk, but your returns are also high because the quantum that you play is also higher. But overall, I be very frank with you is that I have not seen a CCR project that is under low risk that often. So most of the CCR project, when you compare everything plus the pricing, you realize that they are more on the medium and high risk side. Okay, so it's very difficult to do a video like this, sharing all the secrets, helping you in your property decision. So please help me. No need to pay anything. Just like and subscribe. Okay, give me a like in the video, share the video to your friends. Hope everyone benefit from this video, and thank you very much. I see you in the next episode, and